Ladies and gentlemen, listen up. Today is not just another date on the calendar, August 4, 2025. It is a crossroads, a moment where history could bend in silver's favor. Hear me when I say there comes a time in every story where the page turns, not because the chapter is finished, but because something forces it to turn. Attention builds, quietly, relentlessly, until the moment it cannot be ignored. You see, the world doesn't wake up to change in the middle of a speech or the release of a headline. It wakes up because the ground beneath it starts to tremble, and most people only realize it once the walls start shaking. That is what we are walking into now, not a guess, not speculation, but a structural, inevitable, and deeply consequential shift. For years, silver has been dismissed, underestimated, cast as the shadow of gold. A secondary metal, an afterthought in the portfolios of the timid, but that narrative has expired, not because someone said so, not because a report was published, but because the numbers, the flows, the fundamentals, they refuse to whisper any longer. They are screaming, this is the critical inflection moment. This is not about price. This is about principle. This is about positioning. The dynamics have been in motion for a long time, but people have been too distracted by the noise to see the signal. 5 straight years of supply deficits. 5. That means more is being consumed than is being produced, year after year. That doesn't just hint at scarcity. It guarantees pressure, and not the kind of pressure that quietly evaporates. The kind that explodes when ignored too long. And what do? We act surprised when momentum arrives. We gasp at the breakout. We pretend as if the signs weren't there all along. But the smart money, they don't wait for confirmation. They interpret the tremors before the quake. They don't need permission to act. They act because the moment demands it. Silver's value proposition is no longer theoretical. It is embedded in the very infrastructure of tomorrow. Green energy, solar, electric mobility, industrial conductivity. It is no longer a choice to need silver. It is a requirement, a cost of participation in the future economy. And the deeper you go into that economy, the more critical silver becomes. And yet supply chains are strained. Mined output is not only failing to grow, it is declining in several key jurisdictions. Meanwhile, demand is multiplying, not linearly, but exponentially. And what happens when exponential demand meets constrained supply? The market doesn't ease into equilibrium. It reprices violently. That's the inflection. But this isn't just about market mechanics. This is about psychology, about belief systems, because up until now, silver has lived in the shadow of its potential. But August 4 is when the shadow meets the sun. It is the day that forces the world to look again, to reevaluate, to reconcile what has been ignored. The real inflection point is internal. It's in the minds of those who have waited, who have hesitated, who have sat on the fence hoping the world would give them a clearer signal. Here it is, not from a guru, not from a report, but from the convergence of every major indicator you can find. It is not a matter of if the breakout is real. It is a question of whether you are ready to move when history calls, because history does not wait for permission slips. It does not ask for your convenience. It shows up, and it changes everything. The danger is not in being wrong. The danger is in being late. The cost is not measured in dollars, but in opportunity. Because when this moment passes, it won't come back in the same shape. It never does, so don't just watch, don't just hope. Understand the season. This isn't a rally, it's a revelation. It's not the noise. It's the note that changes the entire song. The curtain has lifted. The stakes have risen. The world has already started to pivot. Now the question is simple, will you? There is a truth in economics that is older than the charts, older than the trading desks, older even than the metals themselves. When what the world wants exceeds what the world has, everything changes. Value is not just determined by price, it's defined by scarcity. And when scarcity collides with necessity, that's not a forecast, that's a fire. We are standing in front of such a fire right now. For years, people treated silver like it was a decorative metal, something you hold when you can't afford gold, something you trade when the world gets shaky. But silver has outgrown that narrative. This is no longer about market positioning or ETF flows. This is about fundamental economics, what is needed versus what is available. And the gap between the two is widening with frightening speed. This is the fifth consecutive year, of a global supply deficit in silver. That's not a cycle, that's not a blip, that is structural. What's being pulled out of the ground is not enough to meet what's being demanded above it, and every single year the gap gets deeper, not shallower. Yet the average investor, still asleep, still debating charts while the numbers beneath the surface scream louder every day. Now ask yourself, what happens when demand keeps rising but supply stays flat? Or worse, begins to fall? You don't get moderation, you don't get balance, you get price dislocation, you get revaluation. The industrial world is hungry. It's not hoping for silver, it's dependent on it. Solar panels, batteries, electric vehicles, semiconductors. The new economy doesn't just want silver, it requires it. Silver is not optional in a green revolution. It is core to its existence, and it's not just industrial demand that's exploding. Investors are waking up. Governments are paying attention. Central banks, some publicly, others quietly, are shifting allocations. ETFs are swelling. Retail investors are buying in physical form, not paper claims. There is belief building under the surface, but belief alone is not what causes a squeeze. It's when belief collides with scarcity. That's when it becomes explosive. Here's the danger that few are willing to say out loud. Silver production is not keeping pace. Mines are aging. New projects face environmental and political delays. Capital expenditure in the sector has been anemic for years. Why? Because the price was suppressed long enough to kill incentive. That's how you end up with a deficit. That's how you walk blind into a storm. And the moment you realize that we're consuming more silver than we are replacing, you begin to understand the scale of what's coming. This isn't just a supply crunch. This is a reckoning. We are not producing enough to keep the machine running, and we haven't been for half a decade. But the market hasn't priced that in yet. Not fully. Because markets don't react to problems. They react to pain, and the pain hasn't reached the surface yet. When it does, there won't be time to reposition. The door closes quickly when everyone rushes through it at once. Right now, people still believe they have time. Time to wait, time to think, time to confirm. But while they wait, while they deliberate, while they delay, the deficit grows. The mine depletion continues. The industrial demand rises, and when the tipping point arrives, it won't be subtle. It will be violent. It will be swift, and it will punish the slow. Because this is the truth. The world doesn't wait for the hesitant. It rewards the prepared. You're not looking at a price chart. You're looking at pressure building under the surface of a global market. The numbers don't lie. The deficit is real. The scarcity is real. And the moment is coming when the world will be forced to pay attention. So what will you do? Will you sit back and say, it's too soon? Or will you see it for what it is? A structural, unavoidable, mathematical reality that is tightening its grip on a market asleep at the wheel. Because by the time the world wakes up, the repricing won't be polite. It never is. Every market has a moment when silence breaks, a moment when the sideways noise, the waiting, the fatigue, it all gives way to a single, undeniable signal. And when that signal comes, it does not whisper, it shouts. That's what a breakout is. It's not just a line on a chart. It's not just a candle-piercing resistance. It is the announcement of change, and silver has made that announcement. You see, people often mistake sideways movement for safety. They think when price moves in a range, it's indecision. But range is not indecision. It's pressure. It's compression. It's a spring winding tighter and tighter until it no longer can stay still. That's what silver's been doing, building tension, absorbing doubt, collecting disbelief, and now it's breaking. When silver broke through the $37 barrier, it didn't just touch it. It sliced through it with intent. That wasn't a test, that was a statement. That was the market sending a message. The rules have changed. The ceiling has become the floor. But most people, they're still looking backwards, still trying to explain the past instead of preparing for what's ahead. Still thinking this is about overbought indicators or short-term pullbacks. No, this isn't about timing. This is about trend. The architecture of the market has shifted. You don't measure a breakout by the move alone. You measure it by what came before. You measure it by how long the market was caged. Because when something has been suppressed for long enough, when it finally breaks, it doesn't just move, it runs. It doesn't knock on the door. It kicks it open. This breakout was not random. It was earned. The consolidation that came before it. Months of sideways trading, low volatility, consistent rejection at resistance. Those weren't signs of weakness. They were signs of preparation. The kind of preparation markets use to trap the unready. The kind of preparation that gives birth to explosive movement. Technical analysts talk about channels, flags, patterns. But patterns mean nothing without context. And the context here is layered. A fundamental deficit, institutional accumulation, and now a technical confirmation. This isn't a single signal. It's a convergence. Breakouts of this nature, breakouts from compression zones, have a rhythm. They don't just move to the breakout level. They move with proportional velocity. And the measured target from this one, $41 to $42 in the immediate term. And beyond that, the long-term projection extends to $60, even $70, if momentum aligns with macro tailwinds. You don't need to predict the top. You just need to recognize that we are no longer in a neutral environment. We are in trend, and trend, once established, tends to persist far longer than most are comfortable with. But here's the tragedy. Most traders will miss it, not because they're blind, but because they doubt. They tell themselves the move is too fast, that they miss the entry, that a pullback is coming, and while they wait, the market marches on, leaving them behind again. Breakouts don't ask for your comfort. They demand your commitment. They reward the bold and punish the hesitant. Because the moment of breakout is not the end, it's the beginning. It's the ignition point. And once ignition happens, the game is no longer about spotting opportunity. It's about staying in the fire long enough to benefit from it. There are only a few times in a market cycle when everything aligns, fundamentals, sentiment, and technicals. And when it does, it's not time to ask for reassurance. It's time to act with precision. This is one of those times. The market has spoken. The breakout has happened. You can ignore it, you can doubt it, or you can understand it. But what you can't do is stop it. Because momentum doesn't care about your opinion, it doesn't need your approval, it only needs space, and silver has just found its space. Now the only question left is, will you move with it, or watch it move without you? There is a lie the market tells when it wants to distract you, a comfortable illusion wrapped in ratios, comparisons, and averages, and one of the most repeated, most misunderstood is this: silver always follows gold. But here's the reality. That ratio, it's broken. And when a system that's supposed to self-correct stays broken for too long, it means only one thing: something explosive is coming. Right now, we are staring at a gold-silver ratio that makes no historical sense. For decades, the average hovered around 50 to 60, but recently, we've seen it stretch to 85, 90, even over 100. That's not a fluctuation. That's a fracture. That's the market telling us that silver is being mispriced, neglected, suppressed, not because of its fundamentals, but because of a narrative that hasn't caught up to reality. Let's break it down. Gold has always been the spotlight metal, the safe haven, the headline. But while the world was clapping for gold, silver was doing the dirty work, quietly, efficiently, powering industries, enabling technologies, filling the gaps between dreams and devices. Gold might sit in vaults and speak of wealth, but silver works. So why the gap? Why this distortion in the ratio? Because markets are emotional. They overbuy what feels safe and overlook what feels misunderstood. Gold is easy to explain: economic fear, inflation hedge, geopolitical tension. Silver, it's a complex story.
part monetary metal, part industrial backbone. It doesn't fit neatly into anyone's portfolio narrative, so they wait. They delay, they underestimate, but that underestimation is precisely where the opportunity lives. The high gold-silver ratio is not a sign of silver's weakness. It's a sign of the market's blindness. And blindness never lasts forever. When the ratio stretches this far, history tells us one thing, and it tells it loudly: silver plays catch-up, fast and violently. Every time the ratio spikes above 80, silver has followed with a parabolic move. Not a grind, not a step, a surge. Why? Because the market always reverts to equilibrium. Because imbalance cannot last in systems governed by supply and demand. Let's make this plain. At current ratio levels, silver is trading like it doesn't matter. Like it's still some minor commodity on the fringes of relevance. And yet, the global economy is shifting deeper and deeper into industries that rely on silver, not as an accessory, but as a necessity. Solar, semiconductors, electric vehicles, medical instruments, high-frequency communication. So ask yourself, how long can the market ignore this? How long can it keep pricing silver as if it's a leftover? Because while gold is riding waves of central bank accumulation and financial hedging, silver is riding the architecture of the future. And the moment that truth penetrates market consciousness, the ratio will not gently ease down. It will snap, and when it does, you will not have time to adjust. These re-ratings don't happen over years. They happen in weeks, days, sometimes hours. The same people who laughed at silver will suddenly chase it. The same institutions that overlooked it will pile in. And those who understood the ratio for what it really was, not a statistic, but a signal, will already be positioned. The market is giving a warning. A quiet one, but clear, because in every other era when silver has been this discounted to gold, it has responded the same way, with vengeance. It does not crawl back into balance. It rips back. It overcorrects. It leaves behind those who thought they had more time. And that is the danger of ratios. They lull you into thinking you're watching symmetry. But this isn't symmetry. It's suppression. It's mispricing. And when mispricing unwinds, it's not the balanced who win. It's the bold. So don't let the ratio fool you. Don't let it tell you silver is weak. Let it show you silver is coiled. Let it show you where the undervaluation lies. Because when the spring uncoils, when silver begins its run, the window will slam shut, and the market will rewrite the ratio once again. The question is, will you still be watching, or will you already be in motion? There's a point in every market where the crowd stops laughing and starts listening. A moment when whispers become headlines. That moment doesn't come when retail traders are screaming or when social media goes wild. It comes when the quiet money moves. The strategic money, the money that doesn't follow price, it creates it. Right now, that money is flowing into silver. You won't see it trending. You won't see it dancing on your timeline. But it's there, in the ETF inflows, in the central bank reserves, in the institutional accumulation that never seeks applause but always finds returns. And while most people are still arguing over whether silver is relevant, the people who move markets have already decided it is. Not in words, in actions, in capital. Let's talk ETF. These vehicles don't chase momentum, they reflect it. When an ETF swells with billions in fresh inflows, that's not day traders piling in, that's strategy. That's portfolio rebalancing at the institutional level. It's wealth managers making decisions not based on this week's candle, but on decade-long cycles. In the past 18 months, silver-backed ETF have witnessed inflows not seen since the last major commodity bull run. Why? Because silver has transitioned from being a speculative play to a strategic allocation. Because the macro backdrop has changed, and the big players know it. Inflation, still sticky. Currency confidence eroding, industrial demand rising relentlessly. Silver is no longer just about diversification. It's about positioning, and smart capital is always positioned before the breakout, never after. But that's just one part of the puzzle. The other part, central banks. You want to know what signals real intent when sovereign entities, governments, begin to quietly shift reserves. You've seen it with gold. But now you're starting to see a shift that should terrify anyone still asleep on silver. Accumulation at the state level.
Emerging markets, in particular, have begun to diversify their reserve compositions, not just by increasing gold exposure, but by exploring the silver layer, and they're not making noise about it. Why would they?
You don't announce accumulation if you plan to continue it. You do it quietly, strategically, gradually, until one day the supply is gone and the price is a memory. Russia, for instance, has already demonstrated an interest in broader metal exposure to shield its economy from sanctions and dollar-based dependencies. But what happens when more countries follow? When silver becomes not just a commodity, but a geopolitical tool? Because here's what no one wants to admit. The moment a resource becomes weaponized, used as leverage in global strategy, it stops being optional. It becomes essential. And when something essential is scarce, it reprices in multiples, not percentages. You think silver is just about investment demand? Think bigger. It's about monetary sovereignty, about hedging fiat decay, about powering technologies and protecting portfolios in the same breath. And here's the killer insight. The supply chain cannot respond fast enough. Mines don't scale on demand. Refineries don't expand on tweets. The infrastructure needed to meet the future demand is not ready, and the clock is ticking. Meanwhile, institutional ownership of silver as a percentage of total assets under management is still minuscule. That's not a limitation, that's a setup, because the reallocation is coming, because when the environment shifts, portfolios follow. Right now, silver is at the inflection point between neglect and necessity.
ETFs are loading, central banks are shifting, and still, the average investor is stuck asking, is it too late? When the truth is, it hasn't even begun. This isn't a pump. It's not hype. It's capital rotation.
Slow, steady, strategic, and when that rotation hits critical mass, when the last ounce of available supply is bought, not with tweets, but with trillion-dollar mandates, the story changes. No one rings a bell at the bottom. No one sends an email when institutions move. But the signs are there for those with eyes to see. Silent accumulation, deep conviction, long-term vision. These are not day trades. These are power plays. So the only question you need to answer is simple. Will you react with the crowd, or will you position with the leaders? Because this isn't just silver anymore. This is a shift, and it's already happening. So here's what matters. Act with vision. Don't chase the hype. Understand the story. August 4 may be the moment when market consensus shifts, when silver transitions from laggard to leader. If you're watching, listening, ready, this is your cue. August 4, 2025. It will be a turning point for silver. Own that moment, invest in insight, and let the story unfold.